Morning, Joe.
Morning, Chris. All right, mate.
Yeah,
Morning,
good.
Danny, if you can hear me. Yeah, not bad, mate.
Good.
Hi, Danny. How we going, mate?
Good morning, guys.
Going on? You
Morning.
good?
I'm all
Oh,
right. How are y'all?
afternoon or evening for you, is it?
Very early
Uh,
morning for him.
Oh,
four
right, okay.
4:33.
I am fucking starving. I'm so hungry. It's really dangerous. On the way home, the
I
petrol
thought you
station.
were fasting.
Huh?
What's happened with the fast?
It's the weekend, man. Have the weekends off.
I'm fasting today, mate.
Are you?
I'm going to head to gym later. Yeah, I
Hmm.
went yesterday.
So I'm doing. I kind of do more like reverse fasting these days. So I'll eat my food earlier, and I'll finish. I'll eat. I'll close my window, my eating window earlier as well. So I'll try and like have my last meal like 4 or 5 o'clock. But I do 36-hour fast. So the way I've
Oh,
balanced out my calories to keep myself in a deficit is I have about 1,300, 1,400 during the week. Saturday, Sunday, I have 2,000. And then Monday, I have a complete day off. So I have a 36-hour fast. And that balances me out at like an average of, I think it's 1,400 per day, which is a good calorie deficit. So yeah. But yeah, it was really dangerous. The petrol station on the way home from the gym has a Greg's in it. Um, and like Greg's is one of my weaknesses. Fucking love a Greg's. Greg's baguettes. And that's something. I always have
morning
to try
or
to think of
evening, everyone.
references
I
for.
don't know where everyone is.
I also,
Danny's in. What time is it over there, Dan?
For me,
Yeah.
4:34 in the morning.
Yeah, see?
you need to get yourself a coffee in you.
I can't do coffee. I'm not
Oh,
a coffee drinker.
shot of bourbon.
I'll take that.
I thought you'd like that one.
Yeah.
Right. We'll just give it a couple of minutes, mainly because I want to eat the rest of this. What a week it was this week. Lenny, you smashed it this week, didn't you? What did you end up finishing on this week,
I don't know. I'll have to work it out.
roughly?
I think I had 3 wins
Mm.
at least, and then there's like partials and that, and it's hard to work out the actual R.
Any losses?
No, not
Decent. Perfect week.
BEs and that, obviously.
Mm.
I covered all of his losses this week.
Mhm.
Don't worry. I got you, Lenny. I got all your losses covered for you. It's my
Yeah,
turn next week.
Bobby
Aussie was.
buys the sellers, buys the sellers.
That's it. You were Lenny's liquidity for him.
Obviously.
Um, yeah, Aussie was being weird this week.
Yeah, I don't know, dude. I thought I had some really good setups on a couple of pairs, but I guess not.
There's um there's obviously something going on in Australia that we weren't aware of. That was making the Aussie dollar stronger. Yeah, that was making the Aussie dollar stronger. Um, I don't know what it is.
Dude, honestly, after looking at my charts, it really just looked like it. I mean, it's just a complete liquidity sweep, and I was just part of it.
Yeah, but
Like, because
look,
I was looking at where the liquidity was at first when it first started and stuff, and it started grabbing, and I was like, all right, let's go, and then it just kept going,
yeah,
grabbing more.
yeah. I know. I was in. Look what I got to treat myself after I finished with this morning's sessions.
Is that from Greg's as well?
No, it's from
Gingerbread man.
that. Do you get your keys, Danny? Do you get your keys?
No, no,
That is the fucking. This is.
American chocolate shit, like, isn't it? I lived over there for a while in Canada, and it's not good compared to ours.
Oh, we're gonna start a fight here, Danny. What do you reckon? American chocolate thoughts?
No.
my favorite.
Yeah, is it good?
Oh yes,
Do you know what? To be fair, a Butterfinger,
that's what I was about to say. A Butterfinger,
mate. That is legit. I love a Butterfinger.
It's
Butterfinger
too
and Twix.
sweet. There's too
No, I
much
like it. It's like
sugar in it.
crumbly and peanut, like brittly. Oh, it's amazing.
So good.
Roland, you're here.
Bruce.
Welcome
Yeah,
back,
I've made
man.
it.
Oh, it's
Made
so
it.
good to have you here.
Yeah,
Welcome,
it's good to
dude.
be back. It's good to be back.
Mate, how you feeling?
Yeah, good. Yeah, good.
Yeah,
Just it seemed like everything just all of a sudden, boom, and I was like, really? I had all the time in the world
yeah.
until I signed up on this, and then, do you know what I mean? It
Mate,
just,
you got a lot on your plate
yeah,
at the best of times, let
well,
alone with you being ill as
uh,
well. Well, look, good to have you back, dude. We'll aim to get you caught up as
yeah,
soon as possible. I'm gonna put
yeah,
some times in the January bootcamp group tomorrow for our trading view beginner session for you and
mhm,
Rowan. But I think it's mainly for you and Rowan. But I think a couple of the other guys want. I think Gary mentioned he wants to jump on it as well. Um, So possibly what might make sense, and I don't mind doing this. What might make sense is we do it straight after boot camp tomorrow because we're all going to
yeah,
be there anyway.
mhm,
So I'll put it up in the group today and just
yeah.
make sure at least you and Rowan can make it. And I think Gary, you can't do tomorrow morning though, can you, Gary?
Probably not. No, I wasn't planning on.
Okay,
But it's
okay.
okay. Just it's if it's recorded, it's fine.
Yeah, I'll record it anyway. I'll record it anyway. Basically, we're just going to go through like a beginner's how to use trading view, basically. Right.
That's good.
With that in mind, let's get stuck in and do end of week markup for Euro USD. So I'm going to share my screen and then we're just going to jump open just a basic plain chart. Oh, that is the right one, actually. That's all our stuff from yesterday, isn't it? Right, let's get rid of all of this. Let's get rid of that. Let's get rid of this. Right, so let's have a look. In terms of what are the perfect market conditions for us as traders, it doesn't really get much better than last week from a for Euro USD. Okay, we had a big news week, and one of the things that I want you guys to all understand is not to fear news weeks. We have specific entry models for news trades and I'm going to talk you through one today because it played out almost perfectly. We have specific entry models for news days, and I used to dread news weeks, and I remember used to go through the charts and be like, "Oh, for God's sakes, I've got news on Wednesday, got news on Thursday. It means that I can't trade." Absolutely not. Get that thought process out your head. That's what all of the social media traders will teach you because they don't know how to trade the news. Now, fundamentals in terms of how to understand the news, that's something that I'll be slowly bringing in, and I'm going to be working with a mentor myself in Q3 who works for Barclays and a couple of hedge funds, who's going to be tutoring me to basically fully understand the fundamentals market, macroeconomics, and things like that, which is, I would say, for me, is my last kind of missing piece of my puzzle that I really want to master. So I'm working with him in Q3. I'll be CPD credited, which means I'll be a qualified. I'll have like a qualification in macroeconomics effectively. And that's all information that I will teach you guys. I'll probably do some sort of education element with it. And just so you know, everyone who's already with me, you'll get that as part of your mentorship. Whatever I produce, now that you're here, whatever I produce, whatever I create, you guys will get access to it. You'll never pay any more. Regardless of what I'm doing with new students, you'll never pay any more than what we've agreed in our original. Okay, regardless of whatever this machine turns into. What's also quite exciting as well is that he's pretty keen on working with us as a team and maybe doing a monthly spot, a monthly podcast, or a monthly webinar with us where he can talk through what his outlook is. He's just like, he can look at a chart, understand, like he's big into like GBP USD, for example. He can look at a chart and he can set levels on the charts where he knows price will go to for particular reasons based upon the economy, based upon news events and things like that. He's just got such a deep understanding of it because he worked in Barclays on the trading floor. There's a guy called Drew Stevens. You might have seen him around on Instagram. He's pretty big in the game. And yeah, we've been communicating for a little while, working together for a few bits and bobs here and there, but we finally put something in place for Q3. So keep your eyes peeled for that. I'll be slowly drip feeding you the fundamental side of it. But the point I'm
Uh,
getting at ultimately is that we don't need to worry about news. Yes, Roland.
Is that Drew Stevens? Is that the guy that you posted something up the other day? He was talking about traders believing that they have to be like 80% profitable to even.
No, that's a American geezer called Zach.
All right,
He's
yeah,
just
because he
another.
reached out to me because I liked it. He reached out to me. He's like, "Hey man, do you trade?" And all like, do you know what I
Oh,
mean? So I was
really?
like, all right, cool. Not yet, but I'm trying to
Yeah.
learn. Like,
Oh,
yeah,
mate.
yeah,
Yeah, that
yeah,
DM marketing. Fair play to him. He's shooting his shot.
yeah. I
Um,
know. It was great.
anyway,
Yeah.
last week was pretty damn good. I mean, just looking at the structure that you've got on price there, you can see pretty clearly. You know, there's lots of opportunities here that we could have traded. So what we'll do is I'll just open up a backtesting spreadsheet. And let's get some trades stuck in. So let's open that up. Start of the week was Monday here. Okay, that was the start of the week. Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, okay, cool. So we started off with, a really good positive cycle. I didn't get this short here. I don't believe I got this short here anyway. But you can see it's really, really clean. So let's look at it from our top down. Okay, so we know exactly what we're looking for. And we can go from there. So weekly range is bearish, as you can see. So we put our weekly high on. Okay, and this is the process that I would follow at the start of every week, just so you know. So weekly range high, weekly range low. We acknowledge now that the weekly range is bearish. Looking at the daily, this is our daily structure. Okay, you don't have to overcomplicate structure. You just draw it out as you see it. Okay, very, very clear daily structure. And we've got here a false break. Why is that a false break and not a false break, true break? Can anyone tell me?
Just the wicks, not a full close above.
Exactly. Okay. So the first close that we've had, is after that wick. So if we'd had a close here, okay, if we'd had a close there, then that would be a first break, and this then would be a true break. Okay, this then would be a true break. But because we haven't had a close, we've only had wicks. When you're doing your first breaks, you draw out until the first close, because that's the first time that structure's actually been broken. If we hadn't had any of that price action to the left, okay, as you can see, that's still just a first break. Okay, it's still just a first break. What would we assume then if market was like this? What would be the next play for us?
Look for sells into the trap.
Look for sells into the trap. Yeah. Okay. So we can't class the wicks as breaks, okay, because they're most likely to be just what? If it's just wicks.
Sweeps.
Yeah, liquidity sweeps. So they're just liquidity sweeps, okay? So the actual break comes when we have a candle closure. So I draw my lines out to that. That gives me my first break. It means that overall, although you'd be looking at this on the 4-hour time frame and say, well, our 4-hour time frame is shifted or has shifted bullish, okay? Because on the 4-hour time frame, we've had both a first break and then a true break, okay? Our daily time frame is still bearish. And so based upon our daily time frame, those who are in that session with us, so everyone who's on the session with us yesterday, what do these then become? These two. Sean, you've got this, I reckon. Joe, you've got this. What do these become? If we're bearish on the daily, what are these?
Put me on the spot here. Don't know. Do they now go IFB, ITB?
ITB. Now, I don't mark them up as an IFB and an ITB. They're not, for me, they're not internal because I would use my internal on things like the 5-minute or the 15-minute. But compared to the daily time frame, this is an internal false break and an internal true break. Therefore, can't be trusted as well as an external first break and an external true break. Okay, that's how we use them. That's how we differentiate between them. Okay. I'll just mark them as an FB and a TB because from a trading perspective, my 4-hour time frame is one of my higher time frames. So that for me is a shift, and I wouldn't be looking at this and think about how slowly the different time frames move. Okay, you know, your daily time frame, lots of candles are taken for shifts. 4-hour time frame, again, you know, full days are taken before a shift occurs. Okay, so that's why I use my 4-hour time frame primarily as my higher time frame on my trading. My daily and my weekly are my ranges. That's where I want to see where my you know, my really high time frame momentum is flowing ultimately. Okay, so 4-hour has shifted bullish. So in order for me to take a trade, okay, in line with my daily bearish and my weekly bearish, what do I need to wait for now?
In TV.
Yeah, I need to wait for a shift on what time frame first?
Hour.
Yeah, an hourly chart. Okay, so FB here, TV here. Okay, so now my three high time frames, weekly, daily, and 4-hour, are now in line with each other. Okay, so I can confidently take a trade. Now, before that happened, we did actually have a position here on Monday morning. I don't believe I got into this trade. I'll be honest, it was a bit of a mad one this last week, but I don't believe I did. Okay, we had a lovely liquidity sweep down here. Liquidity was taken. Go down to our 5-minute time frame. Okay, we had a nice shift. Okay, so you've got structure down here. Okay, and then we have liquidity generated, liquidity taken, liquidity retested. Okay, nice simple entry. Anything like that would have been absolutely fine. First profit target up to Asia high, 3.3. If you got in even conservatively, 2.3, and then your final target would have been up there. Okay, beautiful trade. Okay, TP1 there and TP2 up there. Lovely. Doesn't get much cleaner than that. And that, although against the daily range and the weekly range, is a perfectly valid position because my 4-hour time frame is bullish. I acknowledge that I'm trading against the higher time frame momentum, but for me, the highest time frame that I effectively trade off of is the 4-hour. So if my 4-hour is bullish, I can still take a trade long, even though it might conflict with my daily and my weekly. Okay, if my 15 minute was bullish, but my 4-hour was bearish, then that's where I'm going to start really questioning whether or not I would take that trade. I would class this trade as a with momentum trade, not against momentum, because my daily and my weekly are my higher time frames that I would ideally like all lined up. But as long as my 4-hour is lined up, I'm trading in line with momentum. So this is a pro momentum trade for me. Okay, let's mark it up. So we've got the 27th of Jan, EURUSD. Trade was taken at 7:55, so 8 a.m. Final result was 5.74. MSU1. Make sure we've got everything met. So with momentum, yep. Key liquidity, yep, which was that low. Key time of day, yep. Premium shift, yep. MSU, yep. And easy 2R, perfect. Okay, and it was a beautiful trade. It just went 0 to 5, to 0 to 5. Strategy tester, nice and simple. Pop that in, hit the button. Everything does everything for me. Put it in there. Beautiful trade in line with 4-hour momentum. Moving parts. Doesn't get much cleaner than that. Beautiful trade. Lovely little, you know, retest, liquidity grab, and then structure, sweep, MSU. Nice little confirmation. And yeah, beautiful. Lovely one. What time is it? 9:52. Right, I'm going to do a speed round for us now. So I don't believe I got into this trade. I think I saw it. Okay. Now, it's a counter momentum play because why is this counter momentum? What makes it why is this counter momentum? Because the daily's bearish and the weekly's bearish. So why is this
4 hours bullish?
4 hours bullish, exactly. Okay, so the 4 hours bullish. So we have to acknowledge that this is against momentum. Okay, with these sorts of trades, where can you trade to? So if this is our most recent range, with these sorts of trades, where can you trade to safely?
Equilibrium.
Equilibrium, okay? Or what did we learn about last night?
EPA.
EPA. And where would the EPA be? Joe, where would the EPA be on this chart? Or any of you that were on last night, where would the EPA be on this chart? And this is our new range. Where's the EPA?
Tough one, actually, huh?
Is it the bottom of that wick underneath that red line?
It's here. No? Is it not here?
No.
Okay.
The EPA, yeah, so that whoever drew the orange line, that's one of the places it could be. Okay. From a range perspective, okay, and if you look at, say, the higher time frames, okay, let's see if it's clear on the hour. It's not really clear on the hour, 30-minute maybe. No, it's not. So the EPA would normally be the external level that's broken. So sometimes EPA can be really, really high up. You can use internal EPA, which would be like that line, I think whoever drew here, okay? But again, it's worth understanding that it's internal EPA, okay?
Yeah,
But
that's the one I put on check just because it was like kind of the order block or the last move, right?
exactly. So remember, based upon the theory we discussed last night, guys, the high of the move, the high of the liquidity sweep that created the range, okay? And you can use common sense here and say that this is our EPA level, okay? It's not the cleanest, as you can see. It's probably clean on something like the hour or maybe the 2 hour. There you go. So it's clean on the 2 hour. Look. Oh, shit. What have I done there? Okay. It's clean on the 2 hour. And prices come down. You can see there's that little rejection from it. Okay. And then it's come broken through. So that would be your internal EPA. It's perfectly valid. But I prefer to use it when it's really, really clear and obvious like that. So if you
why
were,
that hot one at EPA? Because that's in essentially just a high.
because that's the high that was broken to create the new range.
Yeah, but it's not. I thought EPA was when prices are inefficient. That's because you've done this last time. I don't really understand. This is the bit I don't understand. Because usually, like you say, it's when it's inefficient, isn't it?
Mhm.
That's essentially you just took a high. So like, that's why I got confused.
So when price is above that level,
Right?
this range is now inefficient.
How come it's inefficient though? Like, is that just is inefficient?
Yeah, because it's away from this level. It hasn't been back to retest it yet. It's not the best of examples, admittedly. It's not the
Like
best
down
of
here,
examples.
right? Oh, on that same chart.
Wouldn't you like if it's like wouldn't you have took the orders? So there's no orders left there essentially, unless the orders is at the top that took it. If it was a liquidity sweep, you've taken you've essentially taken like you know what I mean, the orders. So why would it go back there if it's already taken people's money? Do you see what I mean? Like I understand it. That's why I'm a bit confused.
Yeah. So basically, when any new range is created, the low, or in this example, the high previously needs to be retested to make this section of price efficient again. Because when price is away from it, okay, there's inefficiencies that are left behind in here. And price needs to come back to retest them.
Right.
Okay. So this is a bad example because it's turned out it's just been a liquidity sweep and it's spent seconds away from it and it's come back to it really, really quickly. Okay.
But the spikes on like so with the wicks on the other candles, though, not be the retest.
Yes, they would be. That's why I said it's a bad example. Okay.
Oh right, yeah, right. I'm with you.
This is technically the EPA level, which is why in an example like this, I would find some sort of internal EPA.
Right, yeah, I'm with you. All right, yeah.
Are you with me? Okay. Yeah. Normally, to really validate an EPA, we'd have something like this, where there's very, very clear imbalance candles, there's very, very clear inefficiency, and then price comes back, retests it perfectly, and then pushes away. This one's a little bit different. Okay. So coming back to the trade itself, the safe play on this trade would be a break of that low. You know, we've then shifted structure. There's not really, I don't really see a great entry in here. You'd have had to take a very high risk entry, something like a first break retest. You know, it's not really a trade that I would rush to get into, if I'm honest. You might have been able to get a position like this, okay, because the confirmation hasn't happened until you've had that first break, true break. And then on this chart, you've either got EPA down there, which would be that level over there, gives me a 1.58, so I wouldn't have taken the trade. Okay, that wouldn't be a trade that I would ultimately take. And sometimes that will just happen, guys. And I've said this to you a few times now. Sometimes you will get areas where price reverses and gives these massive moves, and you think, oh gosh, how did I not get into that? And sometimes it just makes it really, sometimes you just can't get into it. Now, we are looking at the hourly time frames, as you can see. We have had, let's have a quick look. So we've had that grab of liquidity up here. We've then had our first break here on our hourly, which is there. Okay, then we had our true break down here. Now, for me, I think I did take a position on Wednesday. And I think someone like Sam or something said, how come I jumped into that so early? So for me, when I'm looking at price and I'm looking at where price is, moving from and to, this is where my higher time frames will benefit for me. So I know that the weekly chart is bearish. Okay, I know that absolutely. And I know that my daily is taking a first break. So for me, the most obvious and logical play now is a bearish setup. Okay, so when I get that first break, and not just like, what do we notice about that first break? This first break move, what do we notice about it?
Is it the push away with the candle, like the big, like the
Yeah.
fucking massive,
Yeah.
like what's it, momentum
Massive
after
massive
liquidity?
imbalanced candle, loads and loads of momentum, okay? And it puts us in a position where we're like, right, think about it institutionally, okay? Think about it institutionally. That is a huge injection of liquidity into the marketplace. So for me, I'm looking at it thinking, do you know what? I can really seriously consider positions here. And the Monday setup, I mean, we didn't really get a huge amount on Tuesday. There was a setup here. Okay, MSU setup there. Now that we've got, our 15-minute time frame, we've got this massive injection of liquidity. We've got 15-minute time frame, very clearly bearish. These are those opportunities where you can just get in and just, find yourself a position, place a relatively safe stop, and just get yourself into trades, because trades like this, when the markets start lining up like this, they can be really, really profitable. I believe we took a trade on Tuesday morning.
Mate, I think this is where I'm going wrong, yeah, because I'm going to try send you some. Do you know I keep missing them? Or like, say, like, mate, to say if it goes down there, I just for some reason can't, like, if you've got the massive gap up there, the fair value gap, I just can't. I won't get into a trade there because I don't know. I'm expecting. I don't know. I just don't see it as a point of getting in a trade. So by that point, I believe the trade. I believe the trade's already gone, and then I'm waiting for like the next like
Yeah.
big move back up. I think this is where I'm going wrong, and then I'm getting frustrated because I'm sort of waiting for like. I don't know. It's weird, mate. I'll be like, oh, I've got to wait for something to come back up, not just take it there. Because I keep noticing like if everyone does that, mate, and I just every time I go down, I'm like, oh, I won't take it now.
Yeah.
There's something I'm doing. I know I'm doing something wrong, so I'm gonna have to get some trades. I'm definitely doing something wrong, or I'm not seeing something properly.
Okay. Okay.
Yeah,
Well,
I've got a similar question there. So why is that not come up and retested? Why is that big drop off not inefficient? Because I would have assumed then that that's going to come back up and retest an EPA level.
Yeah. So it is inefficient, and you're absolutely right. We've got an EPA level there, but it doesn't have to come back and retest. Just like imbalances don't have to be filled. Okay. And when you have a massive injection of cash like that, sometimes there's too much volume for it to be able to catch back up. Because think about it, the daily's bearish, the weekly's bearish. There'll be institutions waiting for shifts in marketplace, and then moves like this happen, and everyone then just piles into it. Smart traders pile into it. The other thing that you have to understand as well is that when you have areas that become inefficient, okay, I wouldn't take a trade here, because the logical play is when price is going to come back up. But when you then start creating new ranges, okay, that are then making their own efficiency, okay, and you look at all of these EPA levels down here, for example, okay,
they're breaking lower low, lower low, lower low.
Yeah, they're breaking and retesting. This section of price now here, this section of price there, that's now efficient. Okay, it might not be efficient up. It might not be efficient up here. Okay,
But I've got another question in a minute. So, like, say if that was your 4 hour range to the left, yeah,
Yeah.
right? Because this is where I get confused. Like intraday, I've always struggled with intraday trading. Like, so what time frame would you like? What range time frame would you be using down here? Because I would look at that as like, right, I'm in a 4 hour range, but I'm in a discount, so I'll be looking to try and buy it and sell it. Whereas you're selling it in the 4 hour. Do you see
Yeah,
what I'm
because
saying?
I've had multiple 15-minute ranges that have been created.
Yeah, yeah. That's where
I
I'm.
wouldn't have traded this.
Because I'm sort of looking like that, and I'm like, oh, well, it's still in a fucking discount 4 hours, so you can't. Like, do you see it? Like, I don't. I think that's just the way I don't know. I'm definitely doing something wrong, but that is just weird. Like you lot get. Like, I've seen so many people get so many trades like that, and then I do it, and I'm just like, no, you can't trade there. It's weird. I think it's because I've never done like proper intraday trading like that.
Yeah,
So it's
and
like,
this is where you need to get into the habit of doing these end of day markups,
right,
because
yeah,
you will start noticing these patterns in the marketplace. This is I know I bang on about it all the time, but the end of day markups and the end of week markups, they are what turn you into a good trader. Okay. You've just got opportunity after opportunity after opportunity on them. And what it does is it shows you where you could be trading. And that's what makes you better as a trader. All right.
mate, I
So,
think I need to jump in as well because at the end of the day, mate, I'm a shit trader. So I'm trying. I'm thinking to myself that nah, I don't want to lose. But mate, the fact of the point is, I'm a shit trader. I'm going to fucking lose. Like I've got to, like you can't get good at fighting without losing a fight, can you? So
exactly. Yeah. Yeah.
know what I mean?
You've got to get that
I'm
practice in.
getting
You've got to,
frustrated with myself, but then I'm not fucking getting in. I'm not doing it. Do you know what I mean? It's weird.
yeah, you've got to get into trades and you've got to do the markups. You've got to do exactly what we're doing here. It doesn't take long. If you do this every single day for the price action that's happened in that day, take you 5 minutes. I know we chat through these sessions, but these end of week markups, if I was doing them on my own, they would take me 15 minutes, 20 minutes. So I would just sit there, I'd analyze the charts, I'd look at the trades, I'd see what I've got, and we'd go from there. Right, I'm just conscious of time, guys, because we've got to jump on the boot camp. There was obviously this position on Wednesday. I'll mark it up later on my log. We've got this position on Tuesday. Really clean setup. Nice 15-minute ranges that were created, manipulations, lots of opportunities to get in. There's multiple ways to get into that trade. You could have entered here early. You could have entered on the retest here. This one was a little bit more difficult. I think we took this. I think Linny, we took this one, didn't we? I think this was the right entry, wasn't it? Was it here?
Yeah,
Yeah, I think it was.
I got in. Yeah. What day is that? Wednesday.
This is Wednesday, yeah. This is a really simple trade. No, I know how I took it. I took it like this. That's how I took it. I remember now. I took this trade like this. And it was quite a tight entry, something like that. First break. Yeah, that was it. Yeah. We had that. Yeah, nice little level, retested, EPA level. Yeah, perfect example of EPA, guys, for those who were on the EPA session last night. Really good example where we can use it on the lower time frames as well. Nice little break and retest. And again, it's one of those areas where, you'd look at that and be like, well, why is that reversed from there? That's the reason why. It's the EPA level. It's been tagged. You've also got an imbalance in there as well, which is another area where we could see price reject from. Okay, imbalance in there. Nice little rejection. And I think I came out about 3R on that trade. Lovely little position. Then had a bit of a noise for the rest of the day. Nothing really much that we could have done on that one. Beautiful trade on Thursday. Again, nice little breakdown. So the market's already bearish. Okay, bear that in mind. The market's already bearish. Why is it bearish? Well, because this is our structure. Okay, this is our structure, and the structure hasn't shifted. There's no closes above there, right? Okay, you then have this sort of pattern, this kind of like congestion of price. Okay, contraction, and then we get a manipulation. Okay, that then gives us a false break. Okay, the false break gives us a trap to trade into. That would be an internal false break in this example. Okay, trap to trade into, nice and simple. Okay, and then you could enter in one of these MSU setups. There'll be plenty in there. Okay, stop above the high. First profit target would be at the trap, 1.5, something like that. Second profit target would have been down here. This one, unfortunately, I did lose. I think I got in a little bit later. I was then holding out for that low. I ended up with a full loss on that. I have a bit of a different break-even rule to a lot of people. I don't go to break-even unless break-even's been tested once. What I mean by that is this. If I get into a trade like this, okay, I'm never going to break even unless I've hit my profit target, which might be down here. The reason why is that price loves to do this and then that. Okay, break-even points are liquidity points for institutions. They see them as liquidity because that's where stop orders are sat. Okay, and they come back, and you'll see this all the time. They come back, they retest it, and then the price drops out of the marketplace. So I only move to break even when my trade's here. I then move my stops to break even after I've rejected away from that. So that then becomes my break even point. Now I've rejected because why in what situation would price come back up to take my stop loss now?
Reversal?
Reversal, exactly. And therefore, is my sell trade valid anymore?
No.
No. Okay. So if price comes back up to take my stop loss, then I know I need to be out the trade anyway, because what's most likely to happen is this. Okay. A shift and then some sort of, push higher. Okay. If my trade idea is still valid, then price is not going to come any higher than this once it's come back to it, because it's grabbed the liquidity it needs. So for me, I have a pretty firm rule. I do not go to break even until I've tested break even once. So for this trade, ended up in a loss. Sometimes that happens, but the amount of trades that I win because of that rule massively outweighs the occasional loss that I get. And then last one, just before we go, just because I'm conscious that we've got boot camp, I'm just going to put a message up in the group, guys, quickly, 2 seconds, just for those who aren't on it. All right, 2 seconds at everyone. Boot camp starting in 5 mins. Yeah, so we obviously had big news injection here, as you can see very clearly. Okay, news, and we'll talk again. Bootcamp people will talk about this in the next module. News often leaves behind traps. Okay, the news moves themselves become traps because they're a mass injection of cash. So people play stops, lots of stops down here. Now I'm just going to tell my dog to shut up 2 seconds. Just got out in the house, so dog's going mad. Yeah, so when news comes in, it leaves behind traps in the marketplace. We have a very, very simple news reversal entry. We just wait for structure to be printed. Bearish structure. Okay, and this example was this. Okay, bearish structure. Okay, and then we can start taking trades. They're obviously higher risk positions, but they can get you into some fantastic trades, as you can see here. Lovely little position down there. Big old drop off when Trump started chatting about, I can't remember what he was talking about China or something like that. And then we had a massive drop off. So TP1, TP2 was there. Beautiful little news trade. Yeah, great position. Friday, again, similar sort of scenario. We had a nice little liquidity grab up here. Market is bearish, so we don't need any confirmation. We know that that's just an FB. Okay, because everything else is bearish now. And also, and this is the beauty of trading in line with your higher timeframes. When all of your timeframes are in line, you can then assume that this is just a liquidity grab. What it does is it adds that other confluence to say, this is just a liquidity grab so that we can get higher prices. The institutions can grab some orders and then they can sell the shit out in the marketplace. I think I was already in a position on this, so I don't think I took another position on this. I think I took a position on GU instead. But you can see, beautiful entry. Where are we? Here. Yeah, there. Okay, beautiful entry. It is a hidden MSU. So these are the more complicated ones. Again, you have to use this is where all of your confluence will help you. We've got all of our high time frames in line. We've had a very bearish week. We know that the dollar is strong, okay, which is going to send EURUSD short. So we class this as a hidden MSU because although we've only had one test and we haven't had the structure we need, every single one of these wicks on every single one of these 1 minute candles on a much lower time frame is a high, low, high, low, high, low, high, low, right? Okay. So that's still a manipulation. Okay. It's not as clean as the MSUs we would prefer to take. But for me, with all of my other confluences, and I took a very similar position to this on GU, that for me is sufficient. I was still in a small part of my position from the day before with EURUSD, so I didn't need to add anything else in. But that would have been a valid entry for me if I wasn't in a trade already. And you can see how it played out. And this is where when you line everything up, you can take trades that maybe are slightly higher risk in certain situations because ultimately you have enough confluences to support that trade. Okay, there are some absolutes that we need to make sure we're trading with. For example, making sure we're trading in line with momentum with trades like this is absolutely a must-have. Okay, but the fact that I didn't get an absolutely perfect entry, sometimes when you see the markets just moving and they're just moving in your direction, sometimes you just got to get in and hold on. Okay, and sometimes and this is the beauty of the confluences that we'll learn together, is that sometimes you have like 80% of everything you need to take a trade, And something like this, where the MSU setup isn't absolutely perfect, but I've got a clear liquidity sweep, I've got imbalanced candles, I have had a retest, I've then got an engulfing. That for me, I'm looking at thinking, well, why would I not take that trade? Remember, we were speaking about this last night. Trade the trades that are so obvious you feel stupid not taking them. This is one of those situations. If I hadn't taken that trade, or I mean, didn't take the trade, but the opposing trade, at least on GU, if I didn't take that trade on GU, I would have felt stupid. Okay, because I've got enough reasons to get into the trade. From then on, from Friday onwards, we didn't really have anything. We had a counter momentum play here, very difficult to trade to get into, didn't really give you any confirmation till up here. We then took the liquidity and then we had another drop down. So big wacky end of day Friday. Friday afternoons, not my favorite trades to take. Friday afternoons, you're very likely to get a big continuation. Sorry, very unlikely to get a big continuation. You normally have this kind of choppiness as people start taking profits and closing their positions for the rest of the week. All right. So, sorry, the end of that was a bit rushed, guys. Apologies. I'll make sure tomorrow morning we get cracking on nice and early so we can go into these trades in a bit more detail and go through the logging process. But look, that's the week in review. If we go back and we look at these positions, look, let's say we got we had that position there that was 5, that position there that was 2, that position there that was 3, that position there that was 3, that position there that was 2. So 2, 5, 8, 8, 12, and then 17. So 17 are just on one pair last week. Okay. And look at it. If this isn't, you don't look at that. This isn't like those charts you see on social media where they're buying every low and they're selling every high, right? We're cool. We're calculated. We're taking the positions when they meet up with our strategy, and we end up being in a very profitable position. Okay. When the markets move like this, they give us lots and lots of opportunities. And to develop yourself as a trader, this is why these end of week markups are so important for you guys to do as well. Not good enough eventually, January bootcamp accepted, but the rest of you, it's not good enough for you to just sit here and watch me do them. You're not going to learn from that as well as doing it yourself. If you're not doing end of week markups and you are not in the January bootcamp, you need to start doing them. Okay, I can't express how important it is. You need to start doing end of week markups, and you have to start doing end of day markups, and just acknowledging where you could have got into the trade. It's muscle memory, it's conditioning, it's how you drill yourself into finding these things in live markets.
Right, Chris, I got to run to the vets with my dog, so I'm going to give you a message tomorrow or later today. All right, cheers.
Cheers to that. Right, guys, that's us done. All right, so boot camp, I'll see you in the other Zoom. Linny and KB, see you later.
Bye.
See you later.
Have a
Have a
good
good day,
one.
guys.
Thank you.
Bye-bye.
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 Bye.